In this video, we're going to discuss one of the most common questions we get all the time, and that is, how do you trade on a part-time basis? Trading part-time introduces very specific issues that we'll deal with under these topics. So coming up, we're going to talk strategy, swing trading, and technical analysis. Make sure you stick around for the last one, which is technical analysis. A little bit different when it comes to trading on a swing basis, guys, or long-term basis. Neil and Sean joining me as always. Guys, let's jump right into it here. Trading on a part-time basis introduces very key and different challenges that we're going to discuss a little.
100%. And there's that stress because the reality is, if you're trading part-time, let's imagine you only have a couple of hours during the day, or maybe you work different shifts that allows you to trade once or twice a week. There is that pressure that you've got to make the trade at that particular time. You do not want to force yourself into trades. And that's one of the easiest ways, and a strategy around that is to have a laser focus on activity and catalysts. So I'm going to give you an example. Let's imagine you absolutely love something like a PaySafe here, and say you want to be looking at only swing trades, or maybe you can only trade in the morning. You want to make sure that there's something happening on the stock. So one, that could be news. It happened to have it today. That's why you actually have a gap up on the daily chart. Maybe you also want to see something like a breakout from those lows. This day sticks out from the rest because you had a support level and then you had a bit of a breakout. So you know it's going to be active. And then from there, you've got to identify exactly what style of trade it is that you want to do. The simplest thing, if you are trading, let's say at part-time, maybe you can only do it in the morning, or you got that one chance to get in on the day, is just set a simple rule. Something like a pre-market break, or having a price that you like, this 1220 area, which will support all morning long. You buy that one, look right to the next even level here. It gives a clean move in and out. It's a simple structure. Your risk is down to the pre-market low. That's the type of thing that you can take advantage of. However, there was a catalyst here. There was positive news for PaySafe. It was breaking up, gapping to the upside and breaking off of a clear support level. There was a reason to engage in this trade. You've got to be willing. If you're trading part-time and maybe you only have that first hour of the day, if something is not there, you don't want to be forcing a trade, because you're not going to have the rest of the day like a day trader would, a professional day trader. You're not going to have the rest of the day to make that money back. So you've got to make sure that you're patient. Look for those setups that have catalysts. That will be doubly important when you only get one or two cracks at it.
So on the same topic here of strategies, I think it's also very important that PaySafe obviously breaking out there today. And then what about just trading the news, right? So you're sitting here, and what you're going to wind up doing is simply trade when there's a headline to be traded, right? And I just have an example here. This is from Financial Times. U.S. banks gear up for buyback bonanza after passing stress tests. So today, immediately, right away, and remember, this is for part-time traders. So as you notice, I liked WFC breaking right here, this 46 level. So we're above the 50-period moving average, and then we're breaking a key level of 46 right here, and now we're going to the upside. And look what we did right away early this morning. Talk about, being a part-time trader. Take this trade, 920, 925, then 930 right off the open. We know we want to go long. We've got a news catalyst here. And then we also have another trade. You can't see it right here, but another buy right in here when we bought through that 46 level. So again, talk about a stock breaking out. And then also another strategy, if you're going to be a part-time trader, look for those key news pieces, Brendan, where all of a sudden it's maybe changed the environment for a certain sector. And then you want to look at those names because, again, they're going to have the movement, and then you can hit it and quit it. We're out of this trade, guys, right away by 10:30. Could have been even earlier. 10 o'clock was this spot. So you get a nice win there early. So a nice big trade early on headlines.
So strategy's key. We have to be looking at and trading what is moving, and that does consist of having a look at the news every day and having a look at stocks that have some sort of catalyst. So that being said, worth having a look, guys, also at the close, if that time of day might fit into your schedule a little bit better, because we have volatility at the open, volatility at the close. So opportunities do consist there. Let's move on and talk a little bit about swing trading here as well, because obviously if we're trading on a part-time basis, that means we have probably a full-time job. So swing trading might be the better solution.
Yeah, and this is maybe not the low-hanging fruit, but certainly a thing a lot of people think about, because hey, look, if you only have a few hours during the day, or maybe only have a couple of days to trade, how about just not having to manage something from minute to minute? And that's where it comes to swing trading. And the first thing you do, of course, is your time frames are all different. You want to think about trends. You want to think about trend reversals. You want to make sure you're looking at your daily chart, your 60-minute charts, your 15. And there's a couple of points that you have to consider here. When you are, let's say you have that part-time job and you are swing trading, understand that when you set stops, you have target areas for entries and exits. You don't know the time of day when they're going to occur. You know, like I'm going to use Tesla as an example, because this was a trade that we absolutely loved the other day. You had multiple bottoms off 540, bit of a trend reversal forming, and you get this nice cluster that formed. It broke the 50 period when we took out 635. It was a fantastic breakout trade opportunity, swinging right into a 700 level, a quick 10% move, and a likely chance that you're going to get some continuation if you want to hold it further. But you don't know when 635 is going to break. I mean, that could happen at 9:30 when it did at the open, or that could happen in the midday. And if you set yourself a stop, maybe back at 600 or so, again, you do not know when that is going to fill. So you want to make sure you're very comfortable on your platform using things like stop orders, maybe aggressive limit orders, market orders. You might want to reserve those only for very, very liquid names, because there's always a price that you're not willing to pay there, guys. So you have to concern yourself a lot with execution. You want to be able to sort of set it and forget it. You have to know where you're wrong on a swing trade. That's at the end of the day. You can get in at 635 and it's a great breakout trade, but if you don't have an area where you're going to cover that trade, then you're sort of starting out on the wrong foot there. So you have to you're going to want to utilize stop orders, you're going to want to utilize automatic trigger entries. Don't get married to the idea when you're swing trading that you have to get in at 9:30, because just because that break happens here at 9:30 in the morning, you can see moves that happen a little bit later on in the session. You know, I'll show you right here, just after around 10 o'clock in the following session when it made the move to 700. If you were looking for that break and you were only going to put it on manually at 9:30 and you only had that time to put it on, you would have missed it and then would have broken 20 minutes later. Maybe you had to go into work. Maybe you got called away from your station. So those automated orders are going to be pretty important for you. So know them well with your broker.
You can also use, when you're using swing trading, you can also just play trends, right? And I think that a stock that I've been looking at for quite a while here is Palantir. And I just, when you see a trend like this, when you get basically 1, 2, 3, let's just count them up. There's probably like 6 or so red days here and about 15 green days. So these are the kind of stocks that you want to identify. Then I use a 50-period simple moving average. As soon as that's broken, then I think you can put the trade on. And if you're going to swing this, again, it's going to depend on your time frame, what you're looking at, how do you want to get in and out in the same day? Do you want to hold for a week or 2 weeks? That's all going to be based on, your preferences. But if you take a trade breaking through the 50-period moving average and you're going to do this as a part-time trader, I would not take every break. What I would look for is also go back a couple days or however long it takes and make sure that there is some support here when it starts to break, because you don't want to put on a trade, then go to work. So let's just say you put on a trade here at 22 when it breaks, and then you go to work, say, okay, it broke the 50 period. I heard Sean, the guys at TraderTV.Live, said once it breaks there, then we got this move to the backside. You want to also put a stop, and if you don't have an out, then this swing trade could turn out to be a little bit of a nasty one, especially if you're not able to sit there and look at it if it hits this 50 period and bounces back down. So my tip is find a trending stock where you also have some support backside there to help generate an out for this position. And then where you get out is up to you. Look for other supports and resistance so that you don't get caught intraday. But for me, hey, that's a good one, man. Palantir breaking through the 50 period with support on the backside.
Sean, that's a great example to lead us into our third and final topic and portion of this video. And that's going to be technical analysis, guys, because we have to understand that if we're dealing with daily, weekly, even monthly time frames on a swing trading basis, there's a few things we have to understand, a few things that are different, but not only that, ranges are going to expand, so risk is going to be different. But that pay safe chart, definitely a great example, guys.
It 100% is, and I'm going to try to use an extreme example here to hopefully make a point of how you can use technical analysis in significant levels to your advantage. The day we happen to be shooting this on Virgin Galactic, it's made a huge run up today. Let's try to ignore that and focus on what we like to call clusters of price action, where you get acceptance from buying and selling, and then you get a lot of time spent in a price area. And then when you break away from that, those are areas of interest. Now, in this particular case in Virgin Galactic, you go all the way back to last year. I'm going to highlight the only price I've ever gotten involved in this stock that wasn't a day trade. It's $27.50. You get a gap down into this price. We had a very, very nice tight formation in here towards the end of the year, and then it broke out at $27.50. I can go even further back just to show you a $27.50 peak back here in the middle of the summer as well. So it was already a significant level. You used it up on the way up, but on the way back down, again, maybe you're not going to be involved in trading that particular stock every single day. You allow it to come right back into that range, dips down, finds that support. You can be patient. Just patiently wait for that $27.50 as an entry point. You get a nice little upward move here. When the support is finally broken, you probably take a swing loss on that trade unless you sit there holding the bag. Don't turn swing trades into investments. Have a stop. It breaks that low, you get out. And then you're sitting this one out until we break back above both the 50 period and then right into a breakout at 27.50. You have to be willing to be interested in something like a Virgin Galactic, know it's on your swing agenda, but sit out some of these moves. You're not necessarily having to catch the absolute bottom there. If there's a significant level, when it comes up, then you go for it. You break the 50 period here, you get a nice consolidation, and there's your break at 27.5. You have a nice swing that takes maybe a couple of weeks to get you right into that previous top, another consolidation and breakout, fair enough. But you got that key level, that's all you need.
Wrap it up at that. It's an interesting topic because of the time frame involved here. Swing trading, we're talking about basically you're looking at anything above a daily chart. You can, obviously swing a trade from intraday to 2 or 3 or even a week long. So a great look there at some, interesting ideas to take into consideration if you are trading part-time. Focus on the open, focus on the close where the most volume and volatility is, and also focus on multi-day type of trade ideas. Hope you like that one, guys, and learn something about part-time trading. Here's Miss V.
Hey guys, thank you for this great information. Dear viewers, please subscribe to this channel to see more informative content.